Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have Adam Dresher, who is Break of Day Capital's Investor Relations Manager. Adam spent 20 years on Wall Street, where he specialized in covering some of the largest and best performing hedge funds, mutual funds, and family offices. Prior to joining Break of Day Capital, Adam was a multifamily realtor facilitating deals throughout Arizona. Adam helps investors realize their financial objectives through real estate investing. Thanks for joining us, Adam. Can you tell the listeners a little bit more about yourself and what you do?
Sure. Well, first of all, Gary, thanks for having me. Very excited to be here today. So my career on Wall Street, I spent 20 years on Wall Street. What I did was, for the majority of my career, I was, as you said, covering some of the largest and most successful hedge funds and mutual funds. What I was doing there was I was a sales and sales trader was my official title. So what that meant was, early in the morning, I'd get there, digest all the research available out there. And once that was accomplished, I would immediately hit the phones and start covering the funds. And we talked about long-term trading opportunities, short-term trading opportunities. And it was really a great position where, we built some very, trusting and long-term relationships with clients. So how to get into real estate from there was, right around 2008, everybody knows what happened. There was the great financial meltdown, and it hit so many sectors. I mean, real estate obviously was one of the big ones that got hurt. And right around that time, a lot of the people I used to cover said, you know what, we don't really need to pay these many people trading wise. We're going to start doing our trading internally. Same with research. They said, why am I talking to 30 different analysts who cover the tech sector? Why don't we hire a couple, have them come in to talk to us, do our work for us, and pay them. So when the commission started to dry up, I realized I really need to do something new. And the first thing, my wife and I started a small business, moved to Arizona to do that. And once I got going, realized the two of us necessarily don't need to be there at the same time. So I started looking for a new job and talked to a lot of friends, and real estate kept on coming up and up. They said, hey, you understand relationship building, you understand the sales process, why don't you get into real estate? And I liked it. I thought that made perfect sense. Got a license, briefly did residential. And once, after about 6 months of that, got into a multifamily. And I would say, it's a full circle. I'm back to doing what I enjoy most now, investor relations, talking to investors, listening to their needs, and really helping them achieve their financial goals through real estate investing now.
So talk about the difference between Wall Street and real estate, because I know for me and many others, I got very frustrated with the lack of control I had, the manipulation in the markets. It seemed like, the big dogs are the ones that make the money, and everyone else gets screwed, So I'm curious, your thoughts on the differences.
Now, I think you really nailed it in what you said just now. I mean, to me, when people ask me like the big differences, to me, what I love about real estate over Wall Street is the security. that some of the numbers you hear about, Wall Street is, the stock market average, and this includes some huge whiplashes, up markets, down markets, that an average about 8 to 9% annually, and decent return, but it really pales in comparison to multifamily. I know our recent deal we're targeting, internal rate of return, so pricing even the time value of money, 16, 18% return, which dwarfs even usually the best performing hedge funds out there. I mean, hedge funds these days, they have raised so much capital that they get such a big, 2% just showing up January 2nd, get a big 2% fee every single year, that a lot of them have really lost the nerve and really effort to put up big numbers. And often the market is, we'll slightly outperform the market, but, protect on the downside. Now that's great, but you're still going to lose money on the downside. Compare that to multifamily investing where, during the 2008 recession, during the dot-com bubble, even those tough times, multifamily performed quite well. So with multifamily, you're getting a much better return, and it's much more secure. It's a hard asset. People need a place to live, so there's always the need there. And as I said, you said a lot about Wall Street is you get whipsawed, and there's no guarantee. I mean, Wall Street I think can be best summed up in that movie Wolf of Wall Street, where Matthew McConaughey is having lunch with Leonardo DiCaprio his first day, when he just looks at him and says, "Hey, listen, nobody has a clue whether or not stock's going to go up or down. We really don't." And I think that's really the truth about it. And you mentioned also, I mean, one of the numbers I think a lot of people would be shocked to hear is you talk to the legendary investors out there. I mean, Stanley Druckenmiller, one of the his name often comes up as one of the best investors ever, and Ray Dalio, who runs the largest hedge fund. They're wrong a good 40-50% of the time by their own acknowledgement.
Yeah, that's insane because in real estate investing, you if you're wrong that much, then you're dead in the water. There's a lot more predictability in that. Certainly, you can't control where interest rates are going to be, cap rates are going to be, even maybe rent growth. But there's a lot of predictability that you can see, and you can create your own value depending upon what thesis you're going after. For us, obviously, it's value add multifamily. And on a recent deal, we added water conservation to the property, which added almost $3 million of value from day one, which is huge. You can't do that in the stock market.
Yeah, exactly.
So, I'm sure you deal with a range of investors. What are some of the biggest objections you're facing these days?
Yeah, currently the objections I'm really facing from investors is a lot of people just have been listening to the static. They've been hearing a lot about the concerns about interest rates and issues there. So when somebody comes in and asks me, well, what about interest rates? I let them know that we're very disciplined, that we have a locked-in interest rates. We're also in the camp that rates are going to go lower, and we also can refinance at any single time. So that's one of the biggest objections I face with people who've been listening to a lot of the noise out there about the market. And I remind them too that I think this is actually an excellent time, because when you have the fear out there is often when you get the good opportunities to purchase great properties at discounted prices. The other objection I do get as well is some people who are new to multifamily real estate investing are always a little bit concerned about the liquidity. How is their money tied up? And when that happens too, I usually take them through it step by step. We realize how much money they have available that they won't need access to. And that usually is the sum that we come to as a good opportunity to invest in multifamily. And the key reminder is that money is going to incredibly outperform money you have in other investments. So keep that in mind as well.
Yeah, it's amazing how many people don't know about real estate syndications. Their financial advisor doesn't get a fee, so they're pushing stocks. And so, they look at this as maybe too risky. There's just a lot of fear. And how do you get someone to overcome that fear, or get, go from zero to like kind of understanding a real estate syndication? Because it is far different than anything that they've done before, typically.
Yeah, when cases like that, when people are really fierce, when they bring up liquidity, oh, it's risky, I can't get my money back. Well, I just remind them about, at that point, you almost have to give a history lesson. Say, okay, so let's look at the stock market. You're looking at about an 8-9% return, and that number is whipsawed. I mean, you have market years where the market's up 25%, years is down, 10-15%. You have these incredible swings in your money, and compare that to real estate, where this is a hard asset. People need a place to live. There usually is rent growth. Exception of, and in that mind, to look at the market. We're investing in the Southwest that continues to see enormous population growth, and compare these steady returns, and look at model what we're looking to accomplish there. You talked about the water savings, the rent growth, and all in all, you're going to get a much better return based off a stable asset that people need, that can't go anywhere, that there's a shortage of, versus a risky stock market that, as I said, people don't know whether the stock's going to go up or down, and it can easily see the market manipulated in many ways.
What are the top things that you're looking for in an investment opportunity?
Sure. Well, anybody who's ever spoken to me knows the first thing I ever speak about is I talk about our team at Break of Day Capital. That, when you look at an investment opportunity, the most important thing to start off is the operator. Look at their history. What have they done? What's their experience? Have they been through a bear market before? Are they personally invested? You really want to vet them first. And that's usually, I always tell people, the key thing with investing. You really want to look at who's calling the shots and what's their history. So that's the first thing. And, once you've, vetted the operator, vetted the CEO and the team, then you look at the numbers in the deal. And with the deal, you always want to look at, what's the game plan? If they say they're going to get you, a 16-18% internal rate of return, how are they going to do it? And make sure it makes sense. In our case, we talked about water savings, rents being boosted. That's a pretty secure and, common sense approach to a great investment. So look at that first. And then if you're looking at, other deals, as they mentioned, if the returns look to be too good, they usually are. I mean, I got something just today, an email saying, hey, we expect a 41% return annualized. That sounds a little high to me. So when you see these, super returns, that's usually when I'm a little, skeptical or concerned about whether or not that's achievable. And it usually isn't.
Yeah, absolutely. Sometimes we get some pushback from investors that are chasing IRR. We're talking about a couple points of IRR for something that's been a de-risked asset that may be a little bit more conservative, or something that has zero margin for error, and it's an unknown operator. They haven't been in the business that long, and an inexperienced investor is looking at the sexy package, and they're like, oh, well, I can make this, just because it says it on paper, has no correlation with them actually achieving that number. It's a little scary.
Oh, for certain. I mean, and that's, as I said, that's one of the biggest red flags, when somebody's throwing out these giant numbers that they've never achieved either. This is based off of just a brand new project they're presenting to you. 100% would be, wave that red flag when that is presented to you.
What is maybe the biggest or most interesting question you've ever gotten from a potential investor?
Oh, I love that question. One of the investors I spoke to a couple of weeks ago, he loved the deal, loved everything, but then he started asking. We talked about learning, failure, and the question they asked me was, "What is your worst performing asset in the portfolio?" Great question. People love to talk about their winners, not so much things that are not in this case a loser, but something that's just not doing as well as we had hoped. And I said to him, let's look. I was speaking mostly about the one deal we just closed on, but I said, let me take a look. And I looked back at all of our monthly statements our investors get. And I said, okay, there's one here. This one seems to be doing the worst, but keep in mind, it's still making money. However, it's just not doing as well as we had hoped for so far. And then, of course, he asked, okay, tell me what happened, why, and what are you looking to do? And I said, well, the occupancy rate dipped a little bit, which is, some seasonal factors there. But we own 5 properties, within that radius, and they're doing quite well. So we're pretty confident the occupancy rate is going to bounce right back. And he was very content with that answer. And I think also, as we talk about just, things to look for is ask the difficult questions to people. Ask me difficult questions. And the answer should always be an answer, or it should be, I don't know, let me get back to you, and make sure that the person gets back to you.
Yeah, absolutely. If someone doesn't have a struggling property in their portfolio, they don't have enough properties. For someone not, like having a perfectly clean record, that's, that's not realistic. Now, someone could not have any capital calls and fund those themselves or whatnot. And when we were doing our semi-annual call, it was really interesting to see the different graphs for NOI and even for occupancy, how every property varied. It's not a straight line, perfect, and ups and downs. And ultimately, there are more ups than downs. But even properties in the same submarket varied quite a bit.
Yeah. Yeah, they always say markets do not move in straight lines. If you see those straight lines up, that's something else to be worried about.
Absolutely. What makes someone successful at investor relations?
Well, the few things I think really makes you successful in investor relations is, one, you have to have great listening skills and empathy. People are coming to you looking to invest, their hard-earned money. In many cases, their daughter's tuition money they're using for retirement. So you have to understand that. And your job is really to make them as comfortable as possible and excited to invest and to want to invest with you. So that's the first thing I think is very important to have to be good at investor relations. The other things is, one, availability. One thing that really struck me, going back to my Wall Street days, was when I met with the head of investor relations at Pfizer. For a Dow Jones, company, massive market cap, I think north of 200 billion now. And when he was meeting with my investors, some of them knew him quite well, and they got, at the end, they were, small talk, and they'd found out that he had just purchased a house in New Hampshire. And for those who don't know the state, it's very rural, no big cities. And immediately when he bought this house, the company said to him, okay, well, how's the cell phone reception? That was the first thing they asked him about. It wasn't, oh, congratulations. It was, how's the cell phone reception? And he says, it's a little iffy. Pfizer built him a cell phone tower to make sure that they can contact him any day, any night when he's there. And I think that's really important with investor relations, to be available to when your investors call you, to be able to answer their questions and get back to them. My rule of thumb is, when somebody reaches out to me, I want to get back to them within an hour's time. And if I don't pick up your call, it's because I'm speaking to somebody else, and when that call's over, I get back to you. But an hour is sort of my number that I try to get back to people as quickly as possible. And I think the last thing too that's very important too is you have to believe in what you're talking to people. You can tell that that should be one of the first things that when somebody speaks to somebody looking at a deal, is that person excited about that deal themselves? If they have that little cautious tone or like that, again, big concern. They really have to believe in what they're doing, which I certainly do.
Excellent. I love that Pfizer story too.
Oh yeah.
Yeah. So, we talked about struggling before, and everyone in their life has faced failure or made a mistake in their career. And if you haven't, you're certainly not trying hard enough. Talk about one of your big mistakes and what did it teach you?
Sure, no, absolutely. I mean, that's one of the great Warren Buffett lines. I remember him telling his own sons that if you're not failing, you're not trying hard enough. And my biggest mistake ever was back in my Wall Street days, I had a very large trading error one day, and it was entirely my fault. What happened was, at the time, I was trading a lot of healthcare stocks. And so I was speaking a couple of days before to the healthcare portfolio manager, and we determined that in all likelihood this drug was not going to get approved. So they were betting the stock was going to go lower. And at the time, a lot of these drugs were not getting the necessary approval. However, this time it did get the approval, to our surprise. So he was short a couple 100,000 shares, and at the time, the trading pattern we had observed was when approval did happen, the stock was opening at its high, and then it was gradually going lower and lower and lower. So me thinking at the time I was the smartest person in the room, When the stock opened the high, the trader says, okay, I need you to buy to cover our short position, 200,000 shares. I said, okay, this is what I'm going to do. I'm going to wait a little bit. There's no way the stock's going to stay at this level. Little did I know, this is one of the few times where the stock actually opened at the low and closed at the high while we're trying to buy the shares back. So I waited and waited, and the stock is just going straight up. And I keep on saying to myself, this can't be. It's got to lower. It's got to lower. It didn't happen. About 30 minutes into the trading period, got an angry phone call from the trader. How many shares have you bought? And I said, 0. I'm waiting for it to go lower. He's like, what are you doing? You got to buy this. And I pivoted, started buying the stock. But at the end of the day, he said to me, he goes, you need to give me a price adjustment. So it ended up being about an $18,000 trade in there coming out of my top line. But the valuable lesson there was just, one, you never are the smartest person in the room. And to also just be able to adjust and pivot when needed. I mean, something could work 99 times, but the 100th time it doesn't work. Guess what? You got to pivot. You got to adjust. So it was a very valuable, lesson I learned that day. And I guess the happy ending is he did give me enough commissions to cover that trade in there the next few days. So, yeah.
Well done. Well done. Good story. Yeah. Being able to pivot is so important. I think in any business, and owning a multifamily property is a business, and having that ability to pivot, having the cash reserves to pivot when you need to, and call upon other, brokers and your property management company and your team to come up with a plan to maximize your ultimate value of the property is something that has to be done.
Sure.
I know you're active in the community. Talk about some of the things that you do.
Yes. No, I am on the board of City Squash Brooklyn. It's sort of my last connection to my hometown in New York. Things, I'm a big believer in just, volunteer work and giving back to people that were, have done so much for you. And squash did so much for me in my youth. I was a competitive player, played nationally, and it taught me so much. It taught me about, the hard work, getting up early to play before school, after school. It taught me about, mental sharpness, how to stay mentally tough, how to train hard, competition, to, be as competitive as you can be on the court. And then, once the match is over, off the court, friendship. So made some great friends along the way too. And it was one of the sports that really, I think, shaped me to who I am today. And one thing, they started these inner city squash programs, and really the goal is, to leverage squash to help get kids into college. So what they do is, they're tryouts in these schools, pick the team, and once they're part of the program, not only they play squash, but there's tutoring. There's, the volunteer work, taking them to museums, really teaching them a lot about culture as well. And the results have been fantastic. I know City Squash Brooklyn, 100% high school graduation rates, and I believe it's a 98% college graduation rate of the students that go through the program. So that's my one program I do. And the other one too is I volunteer in my church too. My wife and I are wedding marriage counselors. And what we do is we meet with couples, and we take part of they call it SYMBIS, which is saving your marriage before it starts, and really helping them understand, what they're getting into and the importance of communication, tackling difficult issues, and to really help them with the difficult issues before they even, get married, to make sure that they're, out in the open, and really help them with those problems that could arise.
Oh, very cool. Very cool. I did not know that. So very interesting. Yeah. I know you've got a webinar series coming up. Talk a little bit about that.
Yes. Very excited about this. I'm going to be hosting a 3-part webinar series starting on Wednesday, March 6th at 5 o'clock Arizona time, 7 o'clock Eastern time. And this is really for people who are new to multifamily investing. As I mentioned, really our goal is for people to become as comfortable as possible and excited to invest with us. So the 3 parts, the first part is really about the fundamentals. We're going to go over a lot of the terms, the differences between, the internal rate of return versus the average annual return, cash on cash returns versus preferred return. Really go over all the numbers, the terminology, to make people feel as very comfortable. And then 2 weeks later, we're going to do, part 2, which is going to be about, how to properly vet the operator, questions you should ask. And the third part, the following 2 weeks is going to be about, you're ready to invest, what next? What to expect, and to really make people feel comfortable. As we mentioned, it is a liquid investment, but to let you know like how you're going to get the reports, that we're always available to discuss things, that we host not just monthly but often quarterly and semi-annual events as well. So really make people feel very comfortable about investing with us through this three-part series.
Very cool. And how do people sign up for this webinar series?
Sure. So go to our webpage, breakofdaycapital.com. And in addition to, if you have any specific questions, feel free to reach out to me at any time. My email is adam@breakofdaycapital.com. And you can also call me. The best number to reach me at is 602-529-2056 as well. But you can sign up on our webpage. We should have information there. So I encourage you to go to our webpage and sign up to start getting our updates from us.
Excellent. Well, Adam, thank you so much for coming on the show and talking about from Wall Street to real estate and adding a ton of value on investor relations. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.